welcome to At Barrons. I'm Andy Serwer, and welcome to our guest, Bob Frenzel, CEO of Xcel Energy. Bob, nice to see you. Thanks for joining us.
Yeah, thanks for having me, Andy. I'm excited to be here.
So Xcel is a regulated utility based in Minneapolis, Minnesota. Tell us about your geographic footprint, number one, and number two, how you're different from other regulated utilities.
So Xcel Energy is one of the largest investor-owned utilities. We're headquartered in Minnesota, but we actually serve 6 million electric and gas customers across the upper Midwest and in the Southwest. I'd say maybe strategically, probably the biggest differentiator for Xcel Energy is we serve customers where the wind blows and the sun shines. And that has allowed us as a company to really deliver a cleaner energy product over a long period of time at very affordable prices for our customers.
I want to jump right in and ask you about AI data centers, because that's all anyone's talking about in the business, been driving the stocks a lot. How is that changing your business, and what kind of exposure do you have to that industry?
AI data centers are changing everything we do as a company and everything I think the country's going to do over the next 10 to 20 years. It's not going to surprise you, one of the biggest opportunities for data centers is finding reliable, affordable, and sustainable power. And we have that in spades as a country and as a company. The data centers definitely are attracted to our service territory. And we're serving what I would say is our fair share of the data center load today. We serve about 2.5% of the nation's energy, and we have about 2.5% of the nation's data center load. We expect, though, because of the backlog of interest in new electricity from data centers, for us to continue to have outsized growth in the data centers over the next 10 to 20 years.
Have you upped your estimates for your models? I'm hearing talk that all the utilities are saying, well, we used to grow at 2, 3, 4 points. Now we're up in 4, 5, 6. Are you doing that kind of thing?
We are. I would say that for the last 2 decades as a country, we've had basically flat to about 0.5% electric growth across the United States. And that's some combination of population growth offset by energy efficiency. What we're seeing now is we're going to grow by the end of the decade, probably 25% electricity growth between now and the end of the decade, and probably another 25% in the 2 decades that follow that. So between now and 2050, think about a 50% increase in electricity demand, largely, but not exclusively driven by data centers.
I got to ask you, are you concerned about a bubble here? There's also a lot of talk about that too.
We spend a lot of time thinking about how do we protect the existing customers from this new and exciting opportunity and asset class called a data center. And so when I think about how we serve them, we have multi-year contracts, think 15 to 20-year contracts with minimum volume take. So think 75 to 80% of the cost to serve that customer is embedded in this contract. So we're protecting the existing customers from any overbuild or overexuberance that might come with it. Now, I'd suggest that we have real line of sight to the next 5 to 10 years worth of data center growth. I think it's real. I think it's tangible. And I think the signs of growth are quite clear.
But Bob, are these new data centers and this demand pushing up prices for retail customers?
I think almost the opposite. If you think about the electric grid that we operate today, it's one big fixed asset. And if you put more units of production through a fixed cost asset, then that brings rates down for every single customer. Now, we do have to build new infrastructure. And one of the premises of our contracts with our new customers is growth pays for growth. So if I have to build a new power plant to serve an exclusive customer like yourself, then I would ask them to pay for that growth. And that's true in what I would say probably 2/3 of the country. We are an integrated and regulated, fully regulated utility. There are parts of the country at the turn of the century that deregulated some of the parts of their markets. And that deregulated model, while at times through history have been very valuable, are struggling to meet the moment in terms of price transparency and preventing price spikes. We've had some of those price spikes. I do think that policymakers are trying to address those as fast as possible with changes to the way the markets work. But at Xcel Energy, we work in integrated and regulated markets, and we don't see or experience any of the price volatility that you're seeing in some of the deregulated markets in the country.
Right, you're in Minnesota, you're in Colorado, you're in Texas, maybe Oklahoma as well. And so where are these data centers that you're talking about servicing?
I think about our business really operating in 3 regions: the upper Midwest, Colorado, as you mentioned, and then the Southwest. We serve the panhandle of Texas and eastern New Mexico. Think serving the...
Was I wrong about Oklahoma?
You were wrong about Oklahoma.
Sorry about
That's
that. I want
okay.
to correct that. Okay, so it's Texas and New Mexico.
Texas and New Mexico.
Okay, got it.
Think Permian and Delaware oil and gas basins. So we're one of the largest providers
Oh, the
of
landman
electricity.
area.
We are landman area.
Oh, wow. Okay.
One of the largest oil and gas producing areas of the country, and one of our fastest growing areas outside of data centers, is serving the the oil and gas load in the Permian and the Delaware Basin. Those companies still have objectives to have scope 1 emissions approaching zero, so they're electrifying how they make oil and gas. So think electric jackup rigs, think electric compression, when those things over time used to be diesel driven or natural gas driven. So we have lots of growth in the desert Southwest, and we have lots of growth from data centers coming in all three of those regions. We see, for different reasons, interest from both hyperscalers, think Amazon, Meta, Microsoft, et cetera, and think data center developers, QTS, Vantage, people who develop data centers for either the hyperscalers or for maybe smaller users of compute power than maybe what a Meta or an Amazon might need.
Right, and there is this electrification trend in terms of EVs and all those kinds of things that's still going on, right?
Of course. So a big piece of our growth profile is still the electrification of transportation, and I would even say the electrification of home heating. So customers are choosing, think heat pumps instead of gas furnaces, and over time that's adding to the electric load of people's homes. Now it's getting offset by the natural gas load in people's homes, and so from a bill perspective, customers may be indifferent to that switch, but from a emissions profile, they may have picked a cleaner energy or a more sustainable product.
Let me ask you about the sources of energy for your company, because I know it's a kind of diverse. You look at the pie chart, you've got wind, you've got coal, you've got gas, you've got nuclear a little bit. How does that break down?
So it's transitioning. It has been transitioning for the better part of 25 years. If you roll the clock back and look at our portfolio in 2005, you'd have seen generation mix that was probably 2/3 to 3/4 coal-fired. Today, when you look at it, we're more gas and renewables and nuclear. And when you roll the clock forward into 2030, you'll see us be almost 70 to 75% renewable, 15 to 20% nuclear, and 15% gas or so.
Right, and you guys, so there's a couple of things to jump off of there. You guys have pledged to be carbon neutral completely by what year and partly by what year?
We made a couple commitments in 2018. We said we would reduce our carbon footprint from our electric system by 80% by 2030, and we would be carbon-free electricity by 2050.
Right,
and think mid-century.
And you're still pledging to do that?
We are on that path.
Right.
We're on a trajectory to 2030 right now. I would suggest that one of the commitments we also made, or one of the contingencies we made in that 2018 pledge, was we really do need the country to find commercialization of new carbon-free technologies. And there's a number of them out there that are promising. I would say we've been slow to develop some of that. Nuclear is taking probably longer than we expected.
So what else is new?
Exactly. We talk about nuclear. I'm pretty passionate about nuclear. Advanced geothermal, really exciting opportunity, but it's not available to everyone. But if you think about the technology that created fracking for natural gas, we can use that same fracking technology and do geothermal with it much more cost effectively than we used to be able to do geothermal. Now, it's a better product in the West than it is in the East, and so I'm a firm believer that we should use the resources where they exist, the right resources in the right places. And so as I think of as a country, we should be an all of the above country. We should have wind, solar, geothermal, nuclear, carbon capture and sequestration is another technology that's been a bit slow to develop, but it has real promise for a carbon-free future mid-century.
Some people don't like wind, I'll just leave it at that, but a lot of the territory that you serve is windy, and so that's important for you guys, right?
Yeah, we're harnessing the natural resources of the country. We serve, if you plotted our service territories over the wind map of the United States or the solar map of the United States, you'd see an incredible overlap. I'd suggest that the wind farms that we've built over the last 5 or 6 years have saved our customers more than $5 billion as opposed to having powered those with natural gas alone.
Let's talk about the stock a little bit, Bob. Your stock has trailed the ETF XLU for a bit, caught up recently. but still lags it, I guess you could say. What is the market not understanding about your business that you probably believe in?
Look, I'd say that our business is largely a infrastructure owner and operator business. And as we continue to deploy capital to serve our customers in a very cost-effective and affordable way, I think that our investors have found that to be a very promising story. We've had a long period of growth from transitioning fossil fuel assets into wind and solar assets. And now we have the opportunity to capture real energy sales, real energy growth out of this data center opportunity that you and I talked about earlier.
Right. And another issue I think from the market was concerned about, maybe historically a little bit, was significant liability for wildfires. Has that been resolved?
So we had a large legal case against the company for a wildfire that happened in Colorado in the 2001 timeframe. We settled that case in September. And I think the market responded very favorably, thinking the liability was much more significant than what our settlement was. And I think you saw the stock price respond to that settlement very favorably.
You've been CEO since what, August of 2021. What was your plan when you came in, Bob? How would you rate yourself? How far along are you, and what do you want to do going forward?
Yeah, great question. It's such an amazing company, and I've gotten to stand on the shoulders of some real giant CEOs in front of me. And we were on a great trajectory in 2021 when I assumed it. I'd been at the company, I was CFO and then president and COO. So the strategy of the company, relatively unchanged, continue to serve customers with excellence, continue to deploy capital in an advantageous way that it builds a better, more reliable, more modern infrastructure for our customers to benefit from, to continue down a clean energy trajectory, make a cleaner, more sustainable product, and to serve our customers. And you're seeing, I always used to say when I got here that the view through the windshield was better than the view through the rearview mirror. And the rearview mirror has been incredible. If you think about our industry and as a company, we've had a great 10, 20-year run as a company. And I will tell you that what I see into the windshield, into the future, the next 10 years are going to be unbelievable opportunity for us to drive value for our customers, serve new customers, add value to the national security and the cybersecurity narrative of the country.
And what about transmission? I think that's an important part of your business we haven't really talked about. You have over 100,000 miles, is that right, of transmission? What does the future of that part of your business look like?
We've been the number one builder of new line miles of transmission over the last 15 years. And we think transmission as an asset class is something that is going to continue to accelerate into the future. When you think about the way the country has evolved, we were all small individual utilities that have over time grown and grown and grown. And by connecting them, we have the opportunity to share energy, to share dispatch, and that it offers an opportunity for our customers to be lower cost and lower affordability. If I need a backup plant and you need a backup plant, if one of our plants goes out, if we share that backup plant through the region because we're connected by transmission, you'll see a lower all-in cost for customers over that time. And that's been a great strategy as a company, as a country, for the better part of 50 years. We think that in order to continue to drive this speed to power that the administration talks about and the need to serve this very new and electricity-hungry asset class called data centers, we're going to need to build more transmission quickly, and that's something that's challenging, is to build infrastructure quickly, but we need more transmission quickly to make sure that we can continue to meet the moment for these customers.
What are the issues there? Rights of way, NIMBY, all those kinds of things?
Sure. NIMBY, not in my backyard, has been a real theme for a long time. You know, people always want energy infrastructure, they just don't want it near them. I think that a couple of things are going to help. I'm very focused on the conversation that happens in DC at a federal level about how do we get permitting reform. When we talk about the challenges with some of the environmental laws, I think we can build infrastructure and protect the planet at the same time. But we do have to find ways to stay out of courts and to build, infrastructure more expeditiously than we probably have in the last 10 to 20 years in this country.
Let me ask you a very naive question about power lines, because I'm not a power lineologist, but...
A power lineologist.
But you might be.
I as an engineer.
There you go. Why don't they put those things underground? Part of it's up there, they're kind of an eyesore.
Sure, we're sitting here in Manhattan. Most of the electric system in Manhattan is underground. It runs down near the subways and everything else, and you have incredible reliability. It's also incredibly expensive.
It's more expensive to go underground than it is to build those giant things holding those wires up?
We think about it as 3 to 5 times more expensive to go underground than to go overground, at least to retrofit. Now, when we serve a new community or a new subdivision in rural Denver, that's easy to go underground when you build new. If you have to retrofit and you have to, go through roads and sidewalks and people's yards, much more difficult, much more expensive. But when you build it new, and so most of the things we built new in the last 25 or 30 years in the suburbs and exurbs have been largely underground.
See, I always wanted to ask that of someone like yourself, so I'm glad I nailed that. You nailed it for me.
I will tell you one thing, the transmission lines, just to be super clear, high voltage transmission lines are very expensive to put underground because they do have electromagnetic radiation around them, and you want to encase that and make sure that one line doesn't impact the other. That's why the towers are so wide, and so one line's RF doesn't affect the other lines when it's carrying current through the lines. So expensive, not impossible, and certainly something we look at. Real promising stuff like high voltage DC is transmission lines that can be built with low line loss, can go underground, and go long distances.
All right. That's a lot on power.
Lots of innovation on the come.
Changing gears a little bit here. What about the hyperscalers? Do you have conversations with them directly, or are you talking to companies like Crusoe, which helps build these AI facilities? Who are you actually talking to, or who are your customers there?
Both. I would say that you need to address both segments of the market. The data center developers are looking to build data centers, and maybe they're segmenting that into 10 different customers who only need, say, 50 gigawatts of power. But if you're Sam Altman has said, I need 200 gigawatts of power. So we're talking directly to OpenAI, directly to Microsoft, directly to Amazon. Their needs are massive to power these large language models, as well as their just regular way storage, video storage, streaming videos. And so different data centers serve different purposes, but we are talking to all of the major data center developers. Our backlog is 20 gigawatts of data centers, and we're serving, call it 1.5 today, we expect to have contracts for up to 3 by middle of next year, and we have a backlog of about 20 gigawatts waiting to be served.
And how much does a city like Denver use? Like, just give us in terms of a gigawatt.
So peak load in Colorado is about 7,000 megawatts. So if I've got, or 7 gigawatts. Right. So if I've got 20 gigawatts of backlog, that's
3 Denvers.
3 Colorados.
3 Colorados, because right.
We serve about half of Colorado, so maybe it's 3, maybe it's 1.5 Colorados.
Right. Wow.
It's a lot of energy.
So I want to ask about you a little bit, Bob. What is a Navy guy, former Navy guy, doing running an electric utility in the middle of the country?
Well, I'm real proud to be an ex-Navy guy. Maybe it's always a Navy guy, but I'm also a nuclear engineer from the Navy. I used to run aircraft carriers, power plants on aircraft carriers. So I like to say I've been making electricity for 35 years, ever since I got out of Georgia Tech. And I think it was a great background. Both the military side of it as well as the technical engineering side have been incredibly valuable as I sit in a different seat in the company. I can talk very tangibly with our frontline line workers, I can talk with our engineers, and I can talk with our customers, equally capable. And I think the military background was a big part of that.
And you were the CFO at one point, you said.
I was the CFO.
You got that too.
Recovering CFO, recovering nuclear engineer.
Right. And final question, Bob. Why should investors buy your stock now? What does the future hold? What does it have in store for them?
2 reasons. One, I said we're an infrastructure owner and operator. We have a great opportunity to build the infrastructure of the future, both modernizing today's grid, new generation for new customers. We also have incredible amounts of growth. I would say that the data center phenomena is large, it's real, but it's somewhat concentrated. And we expect with our regions where our power prices are, our electric prices are 28% below the national average. We run 5 of the top 10 lowest cost utilities in the country. We think disproportionately we should see electricity growth and electricity sales growth from industrial customers, from residential customers and energy-intensive customers like data centers.
Bob Frenzel, CEO of Xcel Energy, thank you so much for joining us.
Thanks, Andy. It's been great to be here.
This is at Barrons. I'm Andy Serwer. We'll catch you next time.